Welcome to today's episode. If you gave me 500,000 to invest in Kenya today, here is how I would divide it to balance between safety, returns, growth, and personal development. This is part of my How I Would Invest series, where I get to show you how I'll personally allocate a particular amount of money from 10,000 all the way up to 10 million using the available investment vehicles in Kenya that are real, that are practical, and that are structured for the Kenyan market. By the end of this video, you'll have a well-diversified portfolio that can help you protect your money, generate more money on a consistent basis, and at the same time, invest in yourself. I always start this series by talking about the portfolio framework. It's paramount for you to know that before investing, before allocating any amount of money for any investment channel, always think in three layers: safety and liquidity. How safe is your money? Are you putting your money in a safe investment vehicle? Then liquidity. When you want to access your money, when you have an emergency and you want to access your money, how easily can you access that amount of money? Then look at income and stability. How stable is the income? How able are you to get a steady monthly or quarterly income? And then, of course, I've talked about stability, low risks. And then the final one, which I reintroduced, is known as skills and growth. Investing in yourself is an investment that will always pay out much higher than any other investment. Now, with that in mind, with the framework portfolio in mind, this is how I would exactly invest 500,000 or half a million. Number one, I will start with money market fund, and I will allocate 25% of the 500,000, which is equivalent to 125,000 in a money market fund. Why? Because money market funds will give me safety, will give me liquidity, and they are perfect for short-term savings. Currently, money market funds, as at the time of recording this video, the yield has been around 9%, between 9% and 11% net per year. With funds, there are other funds that have been leading, funds like Gulf Capo, Nabo, and Lofty Coburn. They've been leading with slightly higher interest return rates, but I've done that video and I'll leave it here for you to have a look at it. So 25% has gone to money market funds, and it's important for you to know that I always say this: whenever investing in a money market fund, check to make sure that it's regulated by Capital Markets Authority, so that you get two things: you get transparency and you get safety for your money. I will allocate another 25% of the 500,000, which is again 125,000, to SACCOs. And I'll have to make sure that these SACCOs are regulated by SASRA. Why SACCO? Because a SACCO gives annual dividends. At the end of the year, the profit that has been made is distributed amongst the shareholders, because SACCOs are community owned. And number two, SACCOs also gives you and me the chance to borrow against your savings. Remember, SACCOs will give you times 3, times 4, or times 5 the amount of saving that you have with them. Many SACCOs in Kenya, they pay dividend between 8% and 12%. I've said that in a number of videos, and this encourages a saving discipline or a saving culture. But I would invest in SACCOs with a proven governance. I'll confirm the following: that this SACCO has got a proven governance. It has got audited accounts, and it has got a quick withdrawal terms. This information is available in the public domain. Now we have done 50%. I've said 25% in a money market fund, then 25% again in a SACCO. I will do 20% of the 500,000, which is equivalent to 100,000 in treasury bills and bonds. I can choose because they are predictable and they are assured. For safe predictability part of the portfolio that I'm building, the 100,000 will go to government securities. I can do a mix of bills and bonds, or I can choose one. It's important to know that treasury bills have got three categories. There are those that mature in 91 days, 3 months. There are those that mature in 182 days, 6 months. Then there are those that mature in 364 days, 12 months. And they'll give you liquidity, of course, at the end of the maturity period. And the returns are roughly around 13, 14, or 15%. Treasury bonds that have got a long tenure, 5 to 10-year tenure, will offer a relatively higher returns and a stable annual interest. Bills and bonds are issued by the Central Bank of Kenya and are among the most secure assets that you can always invest in, but realize that they require a higher amount of money for you to invest in them. We've done 25 to money market funds, 25 to SACCOs, we have done 20 to bills and bonds. Now we are doing 15% to Nairobi Securities Exchange, NSE. 15% of that amount, 500,000, is 75,000. So I'll invest the 15% in, I'll focus on the blue chip dividend stocks like Safaricom, Equity Bank, KCB, and EABL. The goal here is not to have overnight success per se, but to build ownership in companies that are established, in solid companies, and earn consistent dividend, while at the same time benefiting from the long-term capital appreciation of the investment that I've put in. I would also consider, while I'm at the NSE, I'll also consider ETFs or REITs, real estate investment trusts, just to diversify and expose my investment to different investment assets without picking individual stocks on my own. So 15% will go to NSE. 6%, I can do 6% in any alternative investment. And if I find a special fund that can take this 6% of that amount is 50,000. I would look for a special fund that has got a minimum of 50,000 and put this money there. And I'll have to make sure that this is licensed by has got licensed fund managers. Special funds give 12, 13, 14, 15 plus percent returns on your investment. It's worth noting that because of the higher returns, they have got higher risks, and as compared to other investment options. And then I will invest 5% to personal skills. 5% is around 25,000. I'll invest 5%, 25,000, to personal development and skills growth. And this is the most important part. I'll invest that amount of money in myself. Why? That means high value. I can look for high value courses. I can look for mentorship. I can look for professional coaching that will not only teach me about money, but will teach me about other skills. These skills will increase my earning power. These skills will increase my negotiating power. These skills will increase my ability to earn more multiply more, and be a better person. You could take a course, you could take a course on entrepreneurship, or you could look for a coaching in a particular field that will enhance your ability to just become a better person. Because as I always say, the best return always comes from investing in yourself. So this is a summary of how I would invest this amount of money. 25% in a money market fund, another 25% in a SACCO, 20% in Treasury Bills, 15% in the stocks or ETFs, 10% in special funds. If I don't get special funds at that particular time, I'll plug this money in the NSE or ETFs. Then 5%, which is 25,000, in personal growth and income potential. So if I had 500,000, that's how I would spread it across safe, regulated, income producing assets, growth focused assets, while still investing in myself. This mixture, this balance gives me liquidity from money market funds. It gives me income from SACCOs, income from bonds, growth from securities and ETFs, and future value from the skills that I would have invested the 5%. Remember that the money invested in knowledge always multiplies and gives you returns higher than any other investment. So diversify wisely, stay consistent, and make your money work for you and work on you, and invest without emotions. Let me know your opinions, and I'll see you in the next video in this our series. Bye bye for now, and I'll see you soon.